Now to a credit rating scandal. Credit rating agency Equifax has admitted it sent out incorrect scores for millions of Americans seeking loans. A mistake with major implications for victims. Rebecca Jarvis is back with that. Hey, Rebecca.
Hey, Michael, and think about this. Your credit score is the thing that impacts whether you can get a mortgage or a car loan or a credit card and how much you'll pay for it. And now Equifax says they sent the wrong scores for huge numbers of people to a number of lenders.
This morning, confusion and outrage after one of the nation's largest credit reporting agencies, Equifax, admitted it provided inaccurate credit scores to lenders for 3 weeks earlier this year.
I really was just quite perplexed and confused about what had happened.
The Wall Street Journal reporting Equifax's faulty scores were sent to some of the biggest banks in the U.S., from J.P. Morgan and Wells Fargo to car lender Ally Financial, as people applied for car loans, mortgages, and credit cards. Equifax confirming nearly 300,000 people saw their scores change by at least 25 points, enough to potentially alter their interest rates or even cause their application to get denied. Alabama resident Q. Davis says he saw his credit score temporarily drop 38 points, potentially disqualifying him for loans. Now he says his score reverted back to normal.
It does kind of, drop a red flag for me personally. And I'm just going to continue just to watch my credit and just keep a closer eye on it.
Equifax blaming the errors on a computer coding issue, confirming it's now been fixed. The CEO addressing the issue at an investor conference in June.
We think the impact is going to be quite small, not something that's meaningful to Equifax.
Equifax, which has about 200 million customers, noting some people may have also seen their credit score go up.
The glitch wasn't one directional. You had people who were getting higher credit scores than they should have and lower scores.
Experts say if your score suffered and your application was denied, you still have options.
The worst case scenario would be missing out on your dream home because you couldn't qualify for a mortgage. Or if you were approved for a loan, but you were approved for less than ideal terms, so your loan is costing you more money per month because you're paying a higher interest rate. You can talk to the lender and have them reassess your application and give you more details about how they came to their decision.
So how do you know if you were impacted? Well, if you tried to obtain credit, a mortgage, for example, between March 17th and April 6th of this year, and you were either denied or you got a lower score than expected, you can look at a few things. First, check your credit report. You can do this for free at annualcreditreport.com. Did you forget to make a payment? Did you max out your credit cards? Or did you or a spouse take out a new loan? If your answer to all these questions is no, and your credit score moved up or down more than 25 points, you may have been impacted. You can also check the Equifax score versus the others and then go talk to your lenders, guys.
Oh my gosh.
Yes.
This is impacting us. Yes. So many people.
In very real ways, Robin.
Yeah, in real ways. All right, Rebecca, as always, thank you. Well, hey there, GMA fans. Robin Roberts here. Thanks for checking out our YouTube channel. Lots of great stuff here. So go on, click the subscribe button right over here to get more of awesome videos and content from GMA every day, anytime. We thank you for watching, and we'll see you in the morning on GMA.